Hello, and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. Here we go. 7th of January, 2018. No trade calls, no recommendations, of response for their own stuff. We're here for educational purposes only. So, what's going on, guys? Hope everybody's having a great weekend wherever you may be, whatever you may be doing. Let's get going. So, what to expect in this first full trading week of the year? Again, it'll be interesting. A lot of people will be anxiously looking at how we close on Monday to get a feel for, the January barometer, see how the first full trading days close for the year. That's going to be interesting. But again, not an awful lot has changed in terms of the bigger picture. So if you missed it, I would suggest you go back on the YouTube channel or on the blog. You can see we did a 1-hour webinar to review 2017, and we looked at all the weeklies, pretty much looking at what we would expect coming into this year. So I would suggest taking a look at that. I mean, of course, corner of the eye will have to be on the bonds, right? We discussed this, the fact that we're still trading inside the box, but they are trading fairly heavy, and it's going to be very, very interesting to see how this plays out. But it does look like they are continuing to trade heavy, and we would expect to see some kind of a test back down here and see if we can take a stab at really getting some momentum below the 152s. If we can crack this double low here, right, this double bottom, whatever you want to call it, we call it, double failure of this box. But if we can crack this, then we would expect 148s, 147s to get tested quick. If we can't and we trade back above the 152s, we would not be surprised to see the 154s. But our base case is still that we have to retest lower before we go higher, even if we end up going higher. One of the most interesting charts, I think, here on Forex, on the Forex side, which we've been looking at, is basically the weekly on Aussie, right? And again, it's a DXY play, right? But basically, we're looking at this to come back and test into the 200-week moving average, and that's where we are. So you see, if you go back on the daily, right in that 200, you see that the daily actually closed negative, right? Ended up closing negative on Friday. So the fight is on here. I think it's going to be very interesting to see how we trade. All things being equal, it still looks like it's fairly strong, but it's not that common to see such a sustained strength. You can even just eyeballing it, go back on your chart, and you see here essentially what we've had is we've had 4 weeks, positive weeks, closing very close to the highs. You can go back on the chart and look, when was the last time you had 4 positive weeks in a row like this closing in the highs? It doesn't happen very often. So you would expect it to be healthy, to see some kind of profit taking, even if we press a little bit higher. But most likely, unless we can get some sustained move back below the 77s, this is probably going to catch buyers, and we'll probably end up testing into these 80, 81 level. So this is going to be fairly interesting to keep an eye out for. Just scrolling down here, CL on crude holding bid above the 60 mark here. Thursday and Friday was the first time where it seemed interesting to try and play a little tactical short to get some kind of a correction. Ultimately, as long as we don't get a close back below the 60 mark, you'd still expect this to ultimately try and take out the 65, even though there's a record long positioning here. But we'll have to see. Keep in mind, as long as we don't trade back below that 200 on the weekly, it'll still stay bid. But if you see how we close towards the back end of last week, it was the first time where we got some sign of weakness. We got a nice little close here. So we did get a chance to trade this to the downside a little bit. It's just that it hasn't really gotten a lot of follow through. So on any move down, watch the 60 mark as a pivotal level, because this could easily come back into here and still hold this upside rotation for the 65. But it's getting interesting, and positioning is very, very one-sided here. So this is going to be another interesting chart to keep an eye out for. we are talking about, of course, it's all about DXY, right? And essentially, dollar's holding very, very heavy. Our base case is still that it's going to trade heavier, but as we said, you know, you'd expect to see some kind of a two-sided action or a healthy market. So don't be surprised to see this come back up even all the way into that 200 and still hold a rotation lower. If you look at it on the daily, it just looks like it's really having a hard time catching a bid. You still have that open gaps there. So I think the healthy move here, right, if we're looking at what would a healthy move be, is to see this try and stabilize, try and pop at the very least back into these 92.60s, right? So that's about another, not even a buck higher, possibly all the way back into the 100 and the 200, and essentially hold this series, right, of lower lows, and then reverse lower off there. But if anything here, I think it's early to try and make a big call. Want to see how we trade here after the 5 first trading days of the week, so we're kind of stuck. But if we're thinking about what is the downside potential before a healthy bounce, we'll probably these lows. But the way this is trading, we think it is time for a healthy bounce, so we'd prefer to look for this to try and trade a little bit higher. Back above this series of descending highs, back above the 50 and the 100 on the daily, then this opens up a potential pop all the way back into the 95, but that's a bit premature to look at that now. Looking at the ES, again, very, very aggressive move. It's quite amusing that some people that haven't been around for a long time think this is normal, right? And that the market can only go up. Now, it doesn't mean it can't continue to go up, you know, but this is a fairly aggressive move. We're up about 2.5% on the year. And if you look at something like the NASDAQ, let's see where the NASDAQ is. If you look at the NASDAQ, basically off that open, up about 4% on the year, right? So if you go back and think about it in, let's say, more rational terms, and you know that, you know, over time, equities, you know, tend to have positive drift. You know, maybe you're talking about average positive yearly returns, depending on the stats you look at, but pretty much around, you know, 8% mark. You know, you see something like the NASDAQ having put in over 4% in the first 4 trading days of the year. You know, if you think that's normal, you really need to check yourself before you wreck yourself, right? It doesn't mean it can't go higher, but, you know, and a lot of people getting excited about all the stats about, you know, when the year starts strong, it finishes up positive, you know, and those are 100% true. But don't forget that nothing moves in a straight line, right? You know, we could be trading up 2, 3, 4% on one of the indices here, and we could end up the year plus 10, plus 20%. But that doesn't mean that you can't have a 10% drawdown from right here, right? Or from somewhere else. So the only message is you want to bet for what happens the majority of the time, not what happens the minority of the time. And it's always pays to think of the market as behaving, right, in a healthy manner. Now, it won't happen all the time, but if you spend your time trying to bet on the outlier, right? Outlier events, outlier occurrences, it's not really a sustained or stable or repeatable way of building a long-term track record, right? So here, going into the week, it doesn't mean it can't go higher, but we'd expect to see some kind of a little move back down. I think here it's just, you know, sky's the limit. So a lot of people are trying to fib extensions and targets to the upside. I mean, you could try and project anything you want, and sooner or later you might get lucky and catch it. The way we look at this is just a little bit of a melt up. It's low liquidity ramps. All these moves tend to happen in the overnight session outside of the regular trading hours. On lower volumes, you've got a lot of gaps. For us, it's just, you know, look at the next round number or the next half round number. That's good enough. But sooner or later, you know, all these gaps are going to fill, right? And again, it doesn't mean we can't end up higher on the year. You know, there's probably a good chance we do end up higher on the year, but it doesn't mean that it it's only going to go one way. So here, in terms of what levels to look at, I mean, to the downside, really, I think the important message is that even if we get a healthy correction, right? Even if you get a move back to the 2700, even if you get a move back into the 26, you know, this is still a very, very strong market, right? So to put it into context, right, off these highs on the ES, you could easily come back and have an intraday correction or a 5% correction, and you're smacked down into these 2600s, right? And you're back in a pivotal level. You've got the 50 DMA, you've got the 100 DMA supporting, you know, it's in trend. So be aware that a healthy correction would be welcome and is long overdue, but don't mistake the healthy correction for a crash and the world is ending, right? It's going to take a lot for this to really get ugly, you know, for this to really get ugly and to not think about the fact that it's just a healthy correction in a strong bull market. You know, you probably have to see this trading below 2400s or something like that. You know, any move back here, even into the 200 DMA, you know, it's still a strong market. Okay, so we'll have to see what happens there. In terms of other interesting dynamics, and also thinking about, you know, possible correction on equities, you know, what that would imply. EJ is another interesting chart, right? Because we've been looking at the fact that we were trading around this this nice range, and there would be plenty of opportunities to trade this range, right? Basically 134.50s to the upside, 131.50s to the downside, and we'd been respecting quite nicely. So here we broke up, and now you see on the daily we put in a little negative close. So it's going to be very interesting to see how this trades, and you can kind of look at this like equities, right? Kind of like that 2700 on the ES. You know, a dip back down right here is probably healthy after this run up, but it doesn't mean it's the end of the world, right? It really has to get ugly for it to be the end of the world. But here it really looks like, you know, the healthy move would be a little bit of a retracement, at least back into this 134.50. And the way we'd look at it, as long as we close above the 134.50, new highs are coming. This is going to continue to rotate higher. If we get a close back below the 134.50, then all of a sudden this range is back in play for us. Okay. Speaking of Euro JPY, we'd have to talk about Euro. So what's happening on Euro? Same thing, it's stalling a little bit at these highs. If you look at it on the weekly, we discussed that it's still looking fairly strong. This could easily correct all the way back. Oops. This could easily correct all the way back into, you know, 119s, 118s, and still hold the upside rotation for the 126. But clearly the way this is trading here, you know, you would expect to see some kind of a dip here, even if it's very, very shallow. So we've got all these, the charts up on the blog. You've got a lot of different areas marked up, but, you know, look at this 121 as the 120.50s, 121 is the pivotal level. So it looks like there's still offers trying to cap there, and as long as it can't break quickly, you'll probably see some kind of profit taking, right? See how it's trading here, having trouble. So again, even if you're looking at on the daily, you know, would be very, very healthy to see this come back down into the you know, 119. Right? You'll still have these two moving averages supporting, coming in, you know, if the 50 manages to cross, still holds. So it looks like this would be a little bit of a healthy move. Now, if we get a daily close below the 119, then all of a sudden things could change quickly, and you could see an acceleration back into the 116, 117 area, and look at it kind of like that EJ, right? The light blue zone comes into play as a zone, but as long as it's just a healthy retracement or shallow retracement, expect to see a little bit more upside. But clearly, we would have trouble understanding why anybody who is flat here, gun to the head, would want to come in and buy Euro, right? For us, you know, always buy, sidelines, or sell. You had the gun to the head here. The only decision you could really make is sideline or sell. You're not going to buy aggressively here into these highs, right? So let's see what happens with Euro. And last but not least, let's take a look at gold. Again, similar to what we discussed on Aussie, you know, gold's had a spectacular run. This is pretty much the same trade we tend to put on every year just before the last FOMC meeting. So these longs, you know, they've really ramped off those lows, right? About 7%, over 7%. So that's a really good move. So do we think this is over? Not really, right? But would it be healthy to see a little bit of correction? Sure. You know, as this, you don't see this kind of move very, very often. Actually, I think this is probably the first time it's ever put in such an aggressive run. So going into the week, the way we look at it, the easiest way to look at it is 1300 is the low and 1350 is the upside. So a lot of choppy action inside this range, and we would expect it to stay moving in a sideways choppy action as long as it trades inside this range. If we get a daily close below the 1300, then we think it's possibly new trade open for a bigger correction back into the 1250. If we get a day close back above the 1350, then we suspect Momo players are coming in play for 1380s, 1400. For right here, it's still sidelined. If you're swing long off these lows, also playing the seasonality, you really have no reason to cover your longs. You know, of course, you want to trail probably using a day stop close below the 1300, but it could be very, very choppy here. I think a lot of people missed the rotation higher, so they'll be begging to get a move back towards the 1300. So I would suspect that if the move back into the 1300 doesn't come on some big headline, you'll probably see a lot of buyers wanting to come in. A lot of people who missed the move who want to get back into that rotation higher to the 1350s and possibly higher into the year. So again, everybody, thank you so much for listening. Thank you so much for sharing. Thank you for liking. Good to be back. Let's see what we get. I'll post a recording on the blog and on YouTube, on Twitter. See you guys around. Have an awesome one. Take care.